If you trade the US indexes, then most likely you've heard of the term turnaround Tuesday. Basically, it's a pattern that exists on the major US indexes, whereby if you buy Monday close and sell Tuesday close, usually you turn a profit. This sheet is part of my algo trading masterclass, and it shows the seasonality of the intra-week on the S&P 500. And we can see that this is 16, which is 4 p.m. That's the closing time. And it actually shows up that there is a trend between the close on Monday all the way to the close on Tuesday. So the pattern does exist. Now all we need to do is to test and find out if the edge is profitable. I mean, there's enough meat in it or not. So here is the S&P 500 represented by futures. This is the daily session, meaning from 9:30 a.m. to 4 p.m. Eastern Standard Time. And I applied the strategy by buying the close of Monday and selling the open next day. So basically we are holding overnight from Monday evening to Tuesday morning. And we can see the performance of this strategy. This is the performance. We are making 68,000. The data I have here is since 2006 all the way up to end of November 2022. Almost 55% win rate, and we have $9,000 plus of drawdown. So we're making 7.4 return to drawdown ratio, which is really good. So this is really a good start. But now let's test the other days to find if this edge is available on all day of the week or only on Monday. So I will optimize by day of the week from 1 to 5. So that's between Monday and Friday. And here is the optimization result. So this is Monday, which is our base strategy, and we're making 68. And then we look at buying Tuesday close and selling Wednesday morning, which is the open. This is buying Wednesday close, selling Thursday open, buying Thursday, selling Friday. And this is buying Friday close and selling Monday open. The edge is very, very clear. I mean, first of all, we make the most amount of money, but also the drawdown is the lowest on this day, and the average trade is more than double of the second best. So this is the second best, $39, and the average trade here is 87, so it's already more than double. So there is a clear edge definitely on turnaround Tuesday. From this simple optimization, we can tell clearly that the edge that we found in the seasonality, intra-week seasonality, is really there. It's not a fluke, and it's not an optimization. It is something really there, and there is some fundamental reason behind it. Of course, I don't know it, but I mean, if you dig, there will be a fundamental reason why this is happening. And this is since 2006. So we have the crash in 2008, 2015, and 2020, COVID, and we have all kind of market regimes in this period. So this edge is definitely exist. And remember, this edge has been reported more than a decade ago anyway. So all we have here is out of sample anyways. Now, the strategy is good, but the average trade is not something to be excited about, and we need to enhance it. And the first thing to enhance is by adding filter. Filters, they come in different shapes and sizes, but usually direction and volatility are the best filters. But before I add any filters, let me add just the end of Tuesday, because if you saw in the Excel sheet, it shows the edge exists all the way till the close. So what about if I don't sell the open of Tuesday, but if I hold on to the close of Tuesday? So this is buying Monday close, selling Tuesday open. And this is now buying Monday close and selling Tuesday close. And you can see here, we're buying the close and we are selling the close. Buying the close, selling the close, buying the close, selling the close. Now, it just so happened that all these three are losing trades, but anyway, the code is working properly. But look at this. Now we're making $92,000, but we have a higher drawdown. And since we don't see any change in the win rate, so then this is a call that you want to make more money with higher drawdown. I would rather go with lower drawdown because I still didn't add any filters, so most likely I will enhance this by adding filters. So let's put the exit back to Tuesday open. And here we go back to 7.4 return to drawdown ratio. Like I mentioned, the win rate didn't change, but of course we make less money with less drawdown. So now we will optimize on the filters. So I put a total of 6 filters, so we'll go from 0 to 6, step 1. So that will give us 7 combinations, and the combinations are 0 is no filter. So this is our original base strategy. And let's look at our filter. So filter 1 is IBS. Now IBS is one of my favorite filters. It's a small pattern. It works really well on short-term strategies. It's basically measuring where the close happened in the daily range. I have a couple of videos on it and you can check those out. So IBS shows a profit of 35,000, but now we slash the drawdown by more than 70%. The second filter is the ADX. Now ADX is a trend filter. Again, it shows a enhancement because yes, we make less money, but we still make lower drawdown. And you can see our average trade now is 168, so that's something really we can work with. The third filter is the RSI, and you all know the RSI. And again, it's really good because it makes the same amount of money, actually a little bit more than the ADX. But look at the drawdown, is less than half of the original drawdown. And of course, we can see that the average trade is higher. Also, the win rate is higher. So RSI really does well. Fifth filter is KCC%. Now KCC is my indicator, is not proprietary, is open actually. It's very simple. I did a different calculation than the original RSI for the reason not to beat the RSI, but to get a different profile than the RSI will give you. And you can see clearly here how we get a different profile, even though they are very close together. So KCC brings more money, around the same drawdown, and more trades. And we sacrifice the win rate. So the win rate is 56 instead of 62. Then we have the close lower than the open. Again, this is like IBS because it's very short term. And usually short term filters have a great effect on short term holding strategies. And since this is only a one-day hold, this will have a huge effect. And as expected, look at this. We slash the drawdown by half. But of course, we make also half the money. And the average trade is nothing to be excited about. Finally, I have a lower low by a certain percent. So here is 2% lower than Friday. So this one only requiring a lower close. This one requiring the close to be 2% lower than Friday. Now, of course, all these filters will have some enhancement, but of course you sacrifice the number of trades. And that's what the filters will do. Usually you are filtering some bad trades. If you're filtering 1 or 2 trades, usually they are outliers, but if you're filtering half the trades, then that means you're doing something. And that something should present itself by either higher net profit, lower drawdown, higher average trade, better Sharpe ratio, etc., or a combinations of all these metrics. So if I sort by the number of trades, we can see the second best is 355 trades, but again, the average trade is not that big. The next best is 319 or 313. So those two are really well. And this one is filter number 4, and that's the KCC%. And the next one is filter number 6, which is the 2% lower close. Now, both of these filters are very close because they have a very close number of trades, very close win rate. But the average trade on KCC% is higher, and therefore you make more money. Let's look at the curve of this strategy. And so the strategy is making 56, and this is the equity curve. We have 2 drops. This is 2010 and 2018. And actually, we can see this in the annual period return. So here is the first drop is 2010. We lost 2,500, and 2018 we lost 1,700. That's the end of the year loss, but of course the drawdown was, so each square is 5,000, so we almost hit $5,000 here. So now that we have the short-term filters fixed, either the KCC% or the close of Monday 2% lower than the close of Friday. Both of these have very close performance, Now we can add a longer term filter because all these filters, they were looking at around 2 days, so they are very short term. Then say because of that, you can add a layer another long-term filters because that will be a general filter. So first I will filter on direction. So this is market regime, which is part of the Algo Trading Masterclass. It consists of two indicators, direction and volatility. So direction goes between 1 and 5, and 0, that means we're not using it. So let's optimize on direction. And so 0 is our base original strategy. There is no short-term filters on it because we always test separately each filter. So now let's look at this. So number 1 is extreme bear market. So trending down really fast, that's extreme bear. So it's profitable, good drawdown. Second one is a bear market, which is trending down but not as fast. Third one is sideways, so there is no trend long term, and again it's making good money. And then number 4 is bull market, which is trending up, and finally is trending up really fast, which is extreme bull market. And we can see all of them are doing well except for extreme bull market. And look at this, it's 142 trades. So it's not an insignificant amount of trades. So that means we can use this filter because it's filtering a good amount of trades, and the average is losing. So we should not be trading in this market direction, which is extreme bull market. And now we will optimize for volatility, and StatOasis market regime volatility goes between 1 and 4. So 0 will be the original strategy. Again, this is the base strategy, 68. So I can say that all of them are good except this one. And we can look at the number of trades. Again, it's not an insignificant amount of trades. It's 182 trades. So that's a big number and we can use that. So that's not an outlier. So we can get rid of this. So from doing the market regime analysis, we can say that we shouldn't trade this pattern in extremely bull market and extremely quiet market. So only when we face those two regimes, we don't trade. Otherwise, we trade all other regimes. I wrote a blog post for this strategy, taking a different directions, different filters, and I posted all the performance metrics and the charts. And you can check the blog post and the code for this strategy that you can optimize yourself on my website through the link below. And now I'm going to add my final addition to this strategy. And look at this, we go to 169,000 profits, return to drawdown 1175, win rate to 74. So we didn't filter that many trades, about 15 trades maybe, I forgot the other number. But now this strategy is, look at this. I mean, it's amazing. Can you guess what I did to this strategy to go to double returns, enhance the win rate, enhance the return to drawdown, and only sacrificing 10 to 15 trades? If you can guess what I did, post it down below and I will reply to you. To learn more, make sure to watch these videos and I will see you there.